Hello, Warriors. Hope everyone did okay on the Fed. I wasn't around, so I really don't know what happened as far as what they said or anything. Hi, Spencer. How are you? Want to welcome our viewers from investing.com. Welcome to ForexAnalytix Community Experience, which there's a lot of experience that you get to experience. I thought I'd start off with copper. So Dr. Copper himself is in an emergency room right now because he's being sued for malpractice, misrepresenting himself as a bull market. Anyone else hear about that on CNN or CNBC? Dr. Copper being sued for malpractice, misrepresenting himself as a bull market. And the weekly really, brings it home. So we've taken out these lows here. There really isn't much except right here. There might be one more attempt to hold in here, but yesterday was really a huge acceleration to the downside. We're very oversold, but if we start penetrating this level, about 277, this is your daily chart, there really is nothing till, the low 260s, something I've been talking about since we had this 3 drive here. Okay, so I know there's probably not a lot of you that, especially at investing.com, that trade copper futures, but if you're a stock trader, there are a lot of stocks that are commodity stocks, right? So, and it reminds me, we have Options Mike with us today, great option trader who's going to be talking about Tesla. But, say for example, you don't want to trade copper, there's always Freeport, right? Where is Freeport? FCX, here, let me just type it in. Okay. So similar to copper, with the huge rally we had in the market since the beginning of the year, look how weak this copper rally, Freeport McMoran rally was. And to me, it looks like we're going to take out the lows, January lows. Even if the S&Ps don't, there are a lot of stocks that could, things like NVIDIA. So also, yesterday's action was negative. And how about that? They sold off. They're trying to come back, the S&Ps. What you really need, something I teach, and I work with like 2-week reversals, and I learned this from Eric Haydick. He writes a letter. It's kind of a dinosaur like me, and he was very big on 2-week reversals. So in the S&Ps, you need by Friday 2906.50 to declare a 2-week reversal. But the divergence is pretty glaring on the weekly. NFP tomorrow. But this is the first serious break, at least all week, that took out a prior low. And, right now this looks like flagging action. It's very possible that sell in May and go away started May 1st. Yeah. Okay, so when I was talking about the experience you get on FACE, which is ForexAnalytix Community Experience, this is all the experience you get. 14 decades. So there's 140 years of trading experience here on the staff. I'm 120 of it. Yeah. You guys didn't know that I was 140 years old. But what a team, man. Huh? Now, this was not my terminology. Someone else calls this the dream team. Yeah, we all know what the dream team was. It was the U.S. Olympic team when Jordan was playing. So in the trading world, we've been accused of being the dream team. So really, good idea to subscribe, because that 140 years is translated into action, patterns in play, great fundamental analysis, Elliott wave harmonics, basic technical, candlestick, macro. Yeah, Jack Benny, 139. Yeah. So why don't you immerse yourself in our community? Just try it for 90 days. After FACE or even during FACE, you're in members chat with, 100 good traders. A lot of them, it's not a hobby, it's not an avocation. I know for a lot it is, but this is how they support themselves. And, I always teach, surround yourself with traders better than you. And you rise to that level, okay, because you're being bombarded with their work. And what happens in there is not just a trade recommendation, because, being in a winning trade is great, but what's even greater? Knowing the hows, knowing the whys, so that trader that you got that idea from, why it happened, so you're able to repeat it on your own. Because really your goal should be to not be dependent upon anybody. Now, I believe in intelligence gathering. I do it all the time. I came out of short crude positions because, Nick has credibility with me. But that's okay. So when you're in the chat room, the osmosis will take hold, and they post charts and they talk about it, and you could be in there for 8-10 hours a day, because if you're serious, you can't be lazy, and you have to do the time if you want to trade the crime. Okay, so Beretta, you can't learn the experience. You're going to have to let time pass, but let it pass in an environment that's going to be supportive. I know Amanda runs a tight ship in there, and Blake's in there a lot. We have rules here at ForexAnalytix, and they're simple. Show each other respect. Right or wrong. And really, the only other rule is you don't root or take pleasure in anyone else's pain or losses. And if you're rooting for that, go find somewhere else to rationalize your own inadequacy. That we're not going to let that kind of toxic behavior happen in our rooms, because we're a community. That means we break bread, we share it with each other. In this case, we're breaking ideas open, we're breaking them down. So maybe Blake will fill me in on what the Fed said. And Blake, I've just been so busy running back and forth to Dennis. I was in pain because the last dentist, he did an extraction, and I went back to him, and he said, oh, like I was being it's just normal what I had. And he actually, when he extracted the tooth, fractured the bone. And that's why I've been in pain. I saw an oral surgeon yesterday. So
sound very pleasant.
Yeah, yeah. So I feel like Rocky Balboa hit me with a left hook in my jaw.
Coach,
Blake's not here?
Yeah, he's here actually, but I asked him to switch places with me because I have a very I have a very tight schedule with meetings and stuff happening today. Stelio.
Yes, I'm here.
Okay, so why don't you just answer to Dale's questions about what happened yesterday and why we had this bidding on the dollar in essence instead of me doing it, and then I'm going to go over the technicals, and then Blake is going to come on my place at the bottom of the hour.
Please fill me in, Stella. I'm a subscriber.
basically we had yesterday just to remind everybody, going into the FOMC yesterday, the market was pricing, okay, no change obviously, but we are pricing cuts within the next 2 years. So by the end of 2020, we're pricing 2 cuts. So it's already a hurdle to actually get that those cuts. But basically, the market was expecting Powell to be dovish, and Powell came out and basically was not dovish. He was very neutral, and he said that there is no case to be made for either a hike or a cut. And that was not what the market expected. He wasn't hawkish, but he wasn't as dovish as the market expected. So that's why the Treasury sold off, and the market became went bid in dollars. Not massively, but
if you remember, Coach, I said explicitly yesterday that I think that somebody being expecting too much dovishness with indices at all-time highs was a dangerous proposition. There was no risk reward behind it.
You think that was it, Steve? And we had like Nick Santiago on. I don't know if you heard him, but he was looking for some type of volume, in the spiders, and it being a down day that would kind of replicate what happened in late March, and that would be the signal. So, was it a high volume day? Do you know that?
From what I actually saw, it wasn't particularly for the move that we saw a really high volume day. Let me take over the charts so I can actually show you. Irrespective of that, though, I have to say that from a technical perspective, first of all, yesterday what we had was a key reversal on the daily chart. So an outside, an outside
bearish engulfing candle, what they call dark cloud cover, or
no, that's not a dark cloud cover. That is a daily key reversal. It's a very, very strong signal. And Blake and I, which isn't any big surprise, because from a technical perspective, it's a very clear-cut ascending wedge here. If you remember, we were showing that yesterday as well. Blake actually wrote his chart of the day, showing exactly this, what you're seeing here, an ascending wedge. We reversed from the highs of the wedge and closed right at the lows of the wedge. So obviously, what we've had so far,
Steve, that wedge actually measures to the bottom of the wedge about 27.20.
20, roughly 27.20. Correct. That's correct. Yes. So we got the first shot, which is what a big reversal on a daily basis. Now, what is left is to see some continuation, which is going to confirm a break below this ascending wedge. And from a technical perspective, then we're good to go. If you want to be more conservative, I would say that areas of support are 28.70. You can see it here, 28.12. And as you very well mentioned, from a technical perspective, an ascending wedge should retrace, to its base, which is in this case 27.20. Yeah, absolutely.
Nice.
If you remember, we also pinpointed yesterday very explicitly that there was a clear divergence between what the major US indices were doing and what the VIX was doing since days ago. I mean, the VIX spiked lower to actually create a bottom at 19th of April. Since that day, it was slowly drifting higher, while S&P now
we're making new highs.
Exactly. And that was also something to monitor. And keep in mind, I have this descending trend line. You can see this intermittent red trend line on the daily chart on the VIX. So,
and you know what, Steve? I was just looking at it yesterday. You know that resistance you have at 18 and the recent low we've had? We take out 18, and just arithmetically, it measures 25, 26.
Yeah, absolutely. We can easily spike back up to this horizontal support resistance area, which is at 25, 26.
Yeah, I like it.
So yeah, that's really doable. Even if that lasts for a few days, it is really, really doable. Okay. Same here with the Nasdaq, as you see. Exactly same thing. Yeah. A steeper ascending wedge in this case, but still an ascending wedge. In the case of the Nasdaq, the way I have drawn it, taking into account wicks and everything, we have actually already broken below it. But in this case, I would seek extra confirmation in a break below this double top that we had back here in September, October of 2018 of last year's. So I think, we'd rather see a break below these previous highs to confirm, but, same deal from a technical perspective, same deal.
So last week, Intel foreshadowed this, and this week, Google foreshadowed this.
Well, the leaders can be, leaders can be different at the time, as you very well said.
Yeah.
But yeah, this is the case. At the same time, you remember we were discussing it yesterday, and I told you, sure, fine, but I want to see a break below 284. And now I'm talking about copper, as you understand. Copper at the same time had a massive move lower, which in essence confirmed the bearish scenario here. Okay. So copper breaking below this previous rectangle's resistance. So in essence, breaking back within the rectangle without managing to produce follow through. That was not a big surprise. If you remember, we were saying again and again that its inability to push higher despite so many attempts, started tilting the chances for a bearish breakdown by the day, even more to the bearish scenario. But
okay, so you're flat copper right now. We've had a breakdown. How do you get on a trade like this?
I think in this case you should view this 284 zone as a resistance. So in this case, things are quite simple. I think that the retest of this area is a selling opportunity. As simple as that.
Cool.
There it is.
I like Forrest Gump trades. And I know you're a fan because you said to Stelios the other day, "Run, Forrest, run!" All right, man. All right, hey, Steve. No one knows what this means, but CK.
Yeah.
I'll be back, man. All right.
Okay, mate. Okay. We do know what that means.
Still. Run, Forrest.
Yes, what else did we have from our macro stuff before I go on to explore further?
Sure thing. We had the Bank of England interest rate decision, 9-0 not to change rates. That was broadly expected. And then the accompanying statement really said nothing. Then we had the interview of the Q&A from Mark Carney, who is the unreliable boyfriend, let's remind everybody. And he was relatively neutral. He did say two things which were a little bit funny, actually, because on the one hand, he said that, let me find it. Yes, he said that at least one more rate hike is required to keep inflation in check. And if their forecasts are right, then they're probably going to need to be hiking more than the market expects. And then they went on to drop inflation forecasts for 2019 and 2020. If those two together make any sense to you, they don't make any sense to me. But anyway,
nothing makes sense from the excuses that central banks are using. Just to give you an example, the whole dovish cycle, for example, that the Fed had, and then the 9 rate hikes that we had happened on average with exactly the same inflation expectations.
Yes.
So in essence, at the same time that now the Fed is using inflation expectations as an excuse to stop hiking, but has already hiked 9 times, that, more or less those were the same terms under which it was keeping rates at 0%, at the same terms under which it was hiking 9 times on average.
Yes.
So, go figure.
Yes, and actually talking about inflation, just one more thing I want to say about the Fed. There was a lot of commentary that, the U.S. economy is doing well, the GDP is strong, although that's backward looking, right? The last print, and employment is very good, but the problem is inflation. Everybody is talking about this question mark about why is inflation very low. Well, I'll tell you why inflation is low. Is because the way they calculate it is completely wrong, and they're taking out all the inflationary items and they leave in the deflationary items. It's like
they will keep doing that, so don't worry about it. They will keep doing it to eternity.
We've said this so many times.
If we really start seeing high inflation, that means that inflation is going to be absurd, literally.
Yes. I mean, if you look at education, you look at medical costs, you look at the food and energy, housing, equities, all this stuff. They're all, the rate of inflation is very high, and it just makes no sense to me for the central banks to say, we have a problem with inflation. Well, you're creating it. You can easily solve it if you go back to how you were calculating inflation 20 years ago, 15 years ago. But anyway, they don't want to do that because it's a different problem afterwards. The governments have inflation-linked liabilities. They want to keep those low, etc., etc. So
also don't forget that by definition, or as we would say in Greek etymologika, the word inflation means the expansion of monetary supply, which is exactly what we have, right?
Exactly. People talk about inflation thinking that we're talking about a basket of goods and all that. No, the definition is the expansion of monetary and credit supply. But anyway, it is what it is.
Exactly. Indeed.
So,
and that's how we have to play with. So yes. At the same time, another development that we had yesterday, if you remember, I was monitoring that closely. I expected that probably the Fed would be the one that would tilt this one way or another. We had a contracting range here in silver, so it was bound to break out one direction or the other. We did see a breakdown from this 1480. Previous rectangle resistance was acting for several days as support area. So in essence, more or less the same, not exactly the same situation with copper. The similarity is that both of them were in a rectangle. Both of them broke higher. Both of them broke down below below within the rectangle. The difference is that silver first managed to actually appreciate, decently. It even completed the target, because when you break out of a rectangle, the target is the height of the formation added to the resistance or to the support zone if it breaks down to the downside. So silver first fulfilled this rectangle target, which copper never did. And now it's breaking down again. So this is definitely a bearish development with silver. At the same time, gold, if you remember, I mentioned that yesterday as well, that I'm monitoring this. I'm going to abandon the last part of my position and take profits if we break above this trend line. We actually got rejected from this trend line, and we're now about to retest the lows. I'm actually probably going to move my target, my order from 1265. I'm going to take it off, and I'm just going to move my stop to the remaining of my position above these highs. So let's say at 1289, and I'm going to let it run, because I do see the possibility of an acceleration lower for gold here. At the same time, and this is one of the things we also saw together yesterday, I was mentioning platinum. I said that platinum, there is still a bullish scenario that is holding once again from this previous rectangles resistance acting as support. But if we break down below it, that's a bearish development, and that's exactly what happened. So now platinum has also broken down from here, and palladium did break down as well from this channel support. But by the end of the day, it had actually pared back like half of its losses to more or less come back to this trend line. So, not something very definitive here. The price action, we did see a new low. We penetrated through this 38.2% fib. I still believe that we can make it down to 1265. So I think this is more or less, this covers all the metals. And now let's go back to my other favorite and my other position, which has to do with crude. And here is crude. As you see, we got rejected from that area. We talked about it yesterday as well. And, I do think that this opens up the possibility for another move towards 60. This looks like a corrective bounce to me. At the very least, I would expect a retest of this horizontal support area, roughly at 61.70 to 62. If not lower. I think that probably crude has the potential of surprising to the downside. Perhaps there is going to be, after such an appreciation that we had, it was one of the best performing markets this year. Perhaps we're going to have people trying to buy this dip as well, and that might cause it to retrace a lot more than the market might be expecting at the moment. So even a move down to 58 looks likely to me. I'm still short. I haven't taken any profits yet. I think there is more downside to come. And as I said, 62, 60, 58, all of those are downside targets that we can easily hit within the next few days. But keep in mind that we're just breaking below this ascending channel on the daily chart, and this might be the technical catalyst for more downside as well. Let me open the question box. I'm going to leave the vast majority of FX pairs to Blake, which is going to be here. He is going to be here within 5 minutes because I have to jump on a meeting. You think we hit 50 moving average in gold? I'm assuming, Scott, you mean the daily one. Let me see. We are already below the daily 50 moving average. Perhaps you mean another time frame that we were looking at, the 4 hour, because I was looking at the 4 hour chart as well. Let me see. No, we're below it as well on the. So please explain in which time frame you're looking at that. You mean a retest? Okay, retest it. No, I doubt it. I don't want to see a retest on the daily chart of the 50 daily moving average. I think that if gold moves as I envision it to move, I don't want to see a move above this spike high, which is already below the 50 daily moving average. So I believe, on the other hand, that this nice confluence of support might be the next target. As you see, the 200 daily moving average and the 50% fib, both of them can be found within, a $1 difference at 12.53. So I do think that that's probably a nice confluence of, a very popular moving average, the 201 and the 50% fib. My pleasure. My name is Forrest Gump, and people will call me Forrest Gump. Okay, so let me see. I already covered the indices. I have nothing else to say. I believe today is going to be an important day. It's going to be an important day to see if we will actually have some follow through, because if we do see some follow through after yesterday's key reversals, I believe there's going to be more downside, and this is probably going to be the technical signal that a lot of participants are looking, those that have already been long, to start booking some profits. Those that have been buying very, very late in the rally, probably starting getting a little bit sweaty, covering positions as well, and that might trigger more selling. So today is going to be probably, an important day. Now, let's go to the DXY, and I don't want to steal much of Blake's thunder. If you remember yesterday, we mentioned that, we see this sell-off in the DXY, but the DXY definitely has not broken the uptrend. We still have a sequence of higher lows, and this remains the case. Yesterday we got a hammer to close the day, which is quite a bullish reversal signal. Of course, it's not enough, but it's something. And we're about to retest the 97.70 horizontal support resistance area. So let's see what happens from here. If you really like dollar to the downside, selling here against the highs makes sense, because 97.70 has acted as resistance multiple times in the recent future, in the recent past. But on the other hand, I would be careful, because as I said it yesterday, I'm saying it again today. We have not had any indications that this was a false break higher, in the sense that, in order for you to categorize this as a false break higher, you need then to get some kind of a technical breakdown, which we haven't had yet in the dollar. Okay, we still have a sequence of higher lows. So in order for me to say that this was a false break higher, I would at least need to see a move below 96 and change. Okay, then I can start seeing this as a potential indication that this was a false break higher, and now we're seeing a bigger reversal lower. Blake,
hey, Steve.
Thanks for switching places with me today.
Oh, not a problem.
I'm sure you have a lot to talk about.
Well, yeah, we have data coming out here in just a second, so I'm going to go ahead and take over for you. And hey, thanks for being here this morning. Just a real quick heads up, guys. We have just some minor data coming out, and have a good meeting, Steve. We have jobless claims, non-farm productivity, unit labor costs. This is a Bloomberg terminal, so you'll see the data come out here first. You can see I'm just going to keep it up on the dollar index for a moment, and stand by. Oh, how many seconds we got? Oh, just a couple. There we go. Boom. Unemployment claims a little bit higher than expected. Everything else, well, non-farm productivity is a little stronger. Weaker unit labor costs, not a big reaction here all the way around. All right, so and like I said, it was all kind of minor data. The key to like yesterday is understanding that the dollar had a real big reversal. Now, Dale, are you here? Maybe not.
Yes,
Okay.
just muted, buddy.
Yeah, no problem. And I know you're dealing with some dental issues, and I'm sorry to hear about that. I know I don't think there's many things that people dislike more than going to the dentist, and it's just no fun.
But go. Take it from me.
Yeah,
but don't procrastinate.
So you were curious on what happened with the FOMC yesterday. Well, the words that no one wanted to hear, if you were a dollar bear, okay, the words you did want to hear is inflation was transitory. And soon as transitory came out, if you were in our ForexAnalytix chat room, we were struggling here at 112.60, and we knew that 112.60 is a big resistance. You can go back and go look at ForexAnalytix and go to the basic technical analysis and go look at yesterday's analysis. This is yesterday, May 1st. Euro dollar is closing in on the 618 retracement at the 112.42 level, which should offer good resistance ahead of FOMC. One of the other notes for the euro dollar is that at the 38% retracement is at 12.40 for the long-term 20th March highs low. The FOMC interest rate reserves are at the 112.60 downtrend line. It may stop here ahead of the chairman's speech. Longs, be careful. Then by the end of the day, the euro dollar closed sessions below the 112 level. And the reason why the euro, so we noted
analysis.
This. Thank
you. You know what? I rest my case, what I was talking about at the beginning of the webinar. Thank you, Blake.
Well, we were in the chat room, and we were like, it's tough being short the dollar, and as we were trading up at 112.55, 112.60. Before this, here, I'll go over to a 5-minute chart. We're sitting up here, and I'm like, man, it's a tough game trying to be short, the dollar. We just can't push above that 112.60. And then when the Fed chairman started speaking, and he said inflation was transitory. Transitory means, that this near-term inflationary lack of inflationary pressures was just transitory, and then the market said, oh crap, we're not going to get a rate cut, just stoke inflation. The Fed feels that the inflation is just around the corner once again, and the euro dollar reversed. And and also I'm just going to say that in the, let me reset this chart here. When we were sitting there talking about yesterday, as the Fed was, before the Fed actually had their Fed statement, I told everybody in the chat room, I'd rather be on the short side of the euro dollar. I can't see them being too dovish here. The data's been good, and inflation is the issue. And if the Fed chairman, basically nods that inflation's not an issue, and soon as that word transitory came out, I said, man, the euro is going to fall, the dollar is going to rip, and we got this really big move. Now the problem is the market was trying to price in rate cuts, and the Fed chairman was very clear that they're comfortable with rates where they're at. Obviously, being comfortable, you can have flexibility, and obviously, if inflation continues to be a problem, the Fed could try to stoke inflation by lowering rates. But they lowered a half a basis point on ready reserves, but that didn't that was already priced into the market.
How
So
about this, Blake? The Fed is not data dependent; they're S&P dependent. Peter Bookvar. And why use your bullets and ammo with S&Ps at new record highs?
well, yeah, there's no. I believe that's the unsaid truth to the Fed. I do believe that, but and you're right. The Fed doesn't need to expend the few bullets that they have in their chamber right now. They don't have to expend it if they don't need to, and the economy is doing well. I mean, if you look at what we're doing versus the rest of the world, we are outshining. Now, that doesn't mean that that's going to be the case or always going to be the case. And I do believe that what's happening around the rest of the world and the slowdown that we're starting to witness, especially in Europe, is going to eventually bleed into the United States in this, long-standing, cyclical expansion that we've seen that's lasted about 10 years. And a note was made. Well, what about Australia? Can we witness something similar to what Australia has done the last 28 years of continuous expansion? So I got to ask the question, when I heard that and the Fed talked about that yesterday, why do you think, Stelios or Dale, if you're both still here, why do you think Australia has experienced this type of expansionary period? Any idea?
Sorry.
Yeah.
China.
Right? Stelios, you were going to say something?
No, I was going to say, can you ask the question again, because I was actually doing something else at the same time.
During the FOMC question and answer session, one of the reporters talked about, about Australia's expansion and how it's been 28 years of an expansion, and is the U.S. and can the U.S. experience something like that? And the Fed governor was like, Powell was like, well, I can't try to predict something like that, but Australia is an unprecedented situation based on this unprecedented growth that you've seen in China. And if you look back, think about, I think back about when I was first starting off in this business in the mid 90s and where China was at then versus where they're at now. And China has seen.
That was my first retirement dinner.
It was where?
When you started. No, when you started.
When you're well, when you're 120 years old, that's to be expected.
Yeah, right.
Your pre-retirement dinner was probably before I was born, but in the 70s, early 70s. But anyway, but the point I'm trying to make here is that China has seen this amazing growth, which Australia has been beneficiary of, and as you guys know, as this Chinese growth looks like it's stalling, and this is a long-term, I believe a long-term China issue where you're going to see growth slow dramatically. Where after we've seen this, like I said, unprecedented growth, you're going to see that start to slow down. But anyway, to see it bleed over into the U.S. is going to be, is probably not going to happen. But we are probably near a cyclical peak, and the fact of the matter is the Fed's going to have some ammunition ready to act when it needs to. But right now is not the time, and so as a result, we had the euro dollar sell off, and I think the euro dollar is now set to resume its downtrend. Now, as a dollar bull, and I'm saying that loosely as a dollar bull because I'm not bearish, but I'm not long the dollar at this moment, even though I was short the dollar overnight. I got a position off at 112 like 05, but my overnight position at 112.14 got tripped, and you can see we've only been a 30 pip trading range, so I got tripped, and then I closed my position out at 112 earlier, like when I first got up a couple hours ago. So I'm already out, but I am playing the dollar to the long side because my 2 cents is, as long as the euro dollar remains below 112.60, I need to be on the short side. Doesn't mean I need to do it right at this moment. It means that my bias is lower, and now I'm only going to play on the downside. But what's going to make me feel better about being long the dollar. And going back to the dollar index, because that's what Steve was referencing just as I was coming on, and he was leaving to go off to a meeting, is that the dollar index really needs to close back above this 97.80. And when or if it does, that to me, especially by the end of the week, is going to signal a bullish dollar continuation. Now, what I'm gonna ask you this, Dale. What is one thing? Now we're past the Fed, what's one thing that could really provoke dollar strength from here? What do you think? If you're still listening in, or if you're not, you might be on mute again. Still,
how about the trade negotiations?
Okay.
That's priced in, right?
Yeah, I think a lot of that's priced in. Where could what else could really provoke the dollar moving higher at this point? Do you think?
Good question.
How about a little risk aversion?
Yep.
I could do it, right? All right. So the S&P, if you didn't see it yesterday, and we blogged this, by the way, on the ForexAnalytix blog, which is free. We had a bearish engulfing candle yesterday. You guys see that? Bearish engulfing. Let me zoom in as much as I can. That's an bearish engulfing candle. Now, bearish engulfing candle within the next day or two, which usually the next 48 hours, 24 to 48 hours, usually within the 24 hours, tends to have a bearish outcome when it's bearish engulfing. On top of it, the risk that you see here in the S&P is, multiples. You have a false breakout above the highs. You have an ascending wedge. You have a divergent relative strength. You have a bearish engulfing. If the S&P today trades below, let's just call it, I had a number of 2908, but let's just say 2900, and we're at 2922. We trade below 2900 in the S&P. The risk now is a false breakout, a reversal, a double top potentially. And I don't really even start thinking about double tops until this. And let me scare you guys. Let me scare you guys a little bit, which I don't want to completely scare you, but let me just talk about technicals and what they mean. So double top, you might go, oh, look, we got a double top. Well, we really don't have a double top until you break the neckline, which is actually down here. That's where the neckline's at. So you won't hear me say we have a double top, like a double top is in play, until we're broken below there. So what that means is if we really actually have a true double top, that means we're going to 1700. Now, obviously we're not going to do that today, tomorrow, next week. I'm just, and I'm not here to, try to scare the crap out of you. I'm just trying to give you what technically things look like. There's a lot of things that have to happen between here, there, and down here. Now, if I could really just drum up a reason why this could actually happen is, let's talk theoretical, obviously. U.S. wants a trade deal with China. And Stelios, help me out here for a second. U.S. wants a trade deal with China. I'm going to ask you this question. Do you think the Chinese government is a fan of the Trump administration?
I would guess no.
I would guess no. I mean, let's face the fact that he's pretty brash and pretty offensive on a lot of different levels.
Mark Chandler said it was a new Cold War with China.
Yeah, sure. I would agree with that. 100% actually. If you watched Mark Chandler's Real Vision TV piece too, I think he mentioned that as well. And if I was,
his interview was better on Face, in my personal, extremely accurate opinion.
So let's talk about that for a second. Let's say you're China, and you're not a big fan of Donald Trump. What does everybody know? What does everybody know that is Donald Trump's blowhorn for success? Stock market, right?
Equity markets, yes.
Equity markets. You know, if China really wants to do Trump in and say, you know what, we don't like Donald Trump and we want to get rid of him, you know, oust him at whichever way we can just not do it. China, we could not do a trade deal if we can sustain as an economy,
and they can.
I think they can too. If we can sustain the next 18 months and renegotiate with a new administration, let's call off the China-U.S. trade deal. Now, I'm really theorizing here, but let's just say, for argument's sake, that's what happens.
Well, they think in 100-year terms, Blake, not in election cycles.
They could care less about Donald Trump is a blip in the you know, whatever, right, you know, for that
scheme of things.
Yeah, in the scheme of things, right? Is it possible that in the event that we called off a China-U.S. trade deal, this could happen? We could actually see this. Now, I don't think that's going to happen. So let me just be clear. I don't think that's going to happen. But I try to look at how is this possible? How is this even possible? This could happen in a quick manner should that happen. I mean, the whole reason why the market is up where it's at is, you know, on a lot of hopes. I mean, think about the beginning of the year, you know, from the end of December to current levels, you know,
Jim Walsh supports your theory here, because I was talking to Jim and I know you respect his work, Blake.
Yes. Yeah.
And I told him, you know, Jim, I'm bearish. Copper looks terrible and crude may have peaked. That doesn't jive with your, even though you were right about China recovering 3 months ago. I said, what could be the catalyst for, you know, the move in copper and et cetera? He goes, the trade deal blows up.
Yeah, you know, and I don't see that happening, but I agree with you. And I know I have limited time here, but the thing is when you're dealing with China, they've got like a delegation of like 100 negotiators coming around, and you know, to talk to the U.S. trade representatives like Lighthouser and everybody else. But you know, if things go sideways, you know, we could be lower quicker. Now, I just tweeted a chart on the Aussie yen, and this is a scary chart because if you're bullish equities, you definitely don't want to see this happening. And we are closing in on, you know, bearish wedge support. Now, a bearish wedge is bearish because there's a higher probability of a downside break than an upside break, and you guys have heard me probably say this 1,000 times. The move to the downside is probably a 60-65% chance. Move to the upside is maybe 30-35% chance. Can we break higher? Sure we can, but chances are that we're going to break lower. That's just the probabilities when you have lower highs and then consistent lows. Like, whoops, that I didn't want to do. That you tend to have the probabilities of breaking lower. Now, what's really scary about this particular chart is this is very, you know, strongly correlated with equities or risk appetite, copper, you know, all sorts of things. Key support comes in here at 74.50 or 77.50, excuse me. Below 77.50, things get a little, you know, dicey because, you know, you could see that below 77.50, I mean, we could start trading in the, you know, mid to lower 70s. I know the spike low happened during Asia one day, but you know, can we revisit 74? Yeah, I think it is possible. Then you have the Aussie dollar, which is barely hanging on 70 cents. And you know, I just also tweeted that Morgan Stanley Trade of the Week was buying the Aussie US dollar here at 70.10. We are trading below their entry price right now. I would have ventured to guess there's a lot of stops below here, and I would venture to guess there's a lot of stops below here. So things could get really ugly really quickly. And if you're looking at the S&P and you're looking at, you know, this ascending wedge, and you know, we have a bear flag pattern here that's already trying to break down. This, you know, I was talking kind of doom and gloom there for a moment, but let's talk more realistic. You know, can we break 2,900 and trade down to 2,880? In the S&P just on a basic, you know, coming out of an ascending wedge, bear flag pattern? Yeah, I think it's possible. And where does that put the Aussie yen? Well, the Aussie yen will probably be trading closer to 77 yen or 77.50 support, maybe even below that to 77 yen, and Aussie dollar probably trading down to 69.50, maybe even 69 cents, which if you take a fib extension from this, and by the way, this is a let's stop here for a second with the Aussie. Whoops, I didn't want to do that. This is a 38% retracement, so you can see this. It's a 38% retracement, right? So this is a pennant, right? Pennant acts a lot like a flag. So when you have, and it's only stopped at a 38% retracement, when you get a stop at a 38% retracement, that means that the likelihood of a continuation pattern is quite high. So that takes us to 68.30. Which what would be the completion of that, and maybe even a little bit shorter if you say, well, the flag actually started here. It doesn't really matter. Whether we go to 69 or 68.50, irrelevant as we break through these lows, because as a trader, we're just looking for this move. Really, this is the money move right here, right there, and then everything from here is just it's gravy and it's very messy, and if you can make a little bit more, great, but this is where the money is made, is right, this blue arrow. So I'm just pointing these things out because markets look a little dicey here, and if things continue the way it's looking with the S&P and the NASDAQ and the Dow, then it could get you could get a little uglier on some of these currencies. Now, I'm not going to go through all the majors this morning. I have time, but if you are a ForexAnalytix subscriber, this is where you can get all the analysis. I do all the basic technical analysis. Well, not all of it. I would say 75% of it I do throughout the course of the week. Amanda updates in Europe. Paul Franco does a lot of the Asian updates, and then Steve and the rest of the team contribute over the weekend and do the weekend analysis. But during the week, this is where I place all my stuff. So if you want to read the analysis, it's really there. Now,
you put together a team that covers the globe, bro.
We try to get we have coverage most of the day, most of the 24 hours, and that that's good, right?
Nice.
In an FX market, that's what we're trying to do. That's the goal. But if you guys want to participate in ForexAnalytix, and you want to help, you want to have your commissions of your trades, help compensate or maybe even reimburse you for your ForexAnalytix subscription, join the reimbursement program. You can contact Forest Park FX on their Skype or an email. This email, it says brokers@forexanalytix.com. It actually connects directly to Forest Park FX, and they'll find a broker that suits your trading style, and that's important because they want to make sure you're successful. But there's certain brokers that are gonna perform better based on what you're trying to do. So make sure you talk with Forest Park FX. They're great guys over there. Just tell them that you're trying to join the reimbursement program, and they'll help you out. They are the sponsors of this webinar. So if you enjoy what we do here, make sure you help us out by contacting them. All right, a couple other things I want to talk about really quick. Let's talk about risk aversion, because, like I said, the S&P looks pretty vulnerable, and I know we're up right now. We're up a few points, but if you look at the intraday charts, we are bear flagging. That's a bear flag right there. And actually, I can tighten up that chart a little bit, and that formation a little bit. It's a pennant, looks something more like that. You can
look at that RSI reading after the break yesterday too. Markets don't bottom with momentum being that oversold. In my view.
Right. So yeah, I agree with you. So that means that we're probably going to have a continuation lower, and S&P, and the relative strength on an hourly will probably match, if not exceed, where we're at. So I agree with you on that, Dale, and that's a great observation that you make because of your extensive experience as a market participant, and you have to have that type of experience to really be able to make those types of observations. And when you're 120 years old and you've been trading for 97 years,
hey, look, I learned that from Jesse Livermore when we were having lunch. We were having lunch in front of the exchange in 29.
I was gonna say he passed away in like 46 or something. That's good. You know, that's good.
We had a beer.
Friend of yours. Yeah, no, I'm just kidding. I don't know what year it was. But I should go back and read Reminiscence of a Stock Operator to go figure out when that is.
I planned a different ending than Jesse, though.
Couple other things though, I wanted to cover. If the S&P really does break down here, look at some of these other pairs like the Euro Yen. Euro Yen has a nice little bear flag developing. You can see it here. It's still development. That's from yesterday, so we can tighten that up a little bit. Looks like yay. You know, there's a lot of support down here, but if that breaks, it could get ugly. You know, there's the Euro Yen. You saw the Aussie Yen. Here's the Pound Yen. And I still believe that we could complete this Gartley. I'm a little skeptical about trading the cable, have been for the last few months, but anyway, you can see we're up against resistance. Good risk reward to be on the short side of the Pound Yen here. Here's the Kiwi Yen, looks ugly. New Zealand Yen looks like all sorts of ugliness, especially if we take out 73.63. That's ugly, and we're not too far away. We're only 20 pips away. Like the Aussie Yen's only 20 pips away of turning into an absolute crap show for bulls. Canadian Yen, you know, a lot of people have been trying to buy the Canadian dollar, and you know, whether it's Canadian Yen or you know or shorting the U.S. dollar Canadian, the problem is with the Canadian Yen. Yeah, we break through some of this support here. Let's just call it 82.50 roughly. I mean, that could get kind of ugly too. You know, there's a lot of open air below these supports and places that we've been. Whenever I see these spikes, you know, a lot of people go, well, Blake, isn't this a V-shaped recovery? And that's, you know, some sort of like, you can say generational, but I don't think you should use that term on these short time frames. But are those levels that are going to be really hard to be retested? If this happened, and you've heard me say this before on, you know, the week ahead videos and you know, live here, if we do that during a period of full liquidity, so during a period of, like during the European hours or during the North American hours when Europe is open, when you see that type of what's the word I'm looking for? The word that shouldn't be used, but very sparingly. Capitulation. When you see a capitulation type of move like that, when it happens during periods of full liquidity, I tend to be more respectful of it. When this crap happens during the European or during the Asian dead hours, when there's like 3 people trading, that would be you, Goldman Sachs, and maybe you know, JP Morgan. When the 3 of you guys are trading, when I say you, meaning you at home, Goldman Sachs, and which probably is the 3rd tier desk trader, and the other guy from JP Morgan, when the 3 of you guys are trading and this happens, that is not I do not look at that as being a valid level. That means those levels could very easily be retested. So when I look at where we're at right now, I go, man, we could very easily see these levels again. We could. It's obviously not going to happen right now. It's not going to happen at this moment, but that's the scary part about when we're sitting on a shelf of support like you see there or you see here. You know, it's like, you know, when we sit at these support levels, if they break, you know, we could see these levels again in the coming weeks ahead. Like I said, it's not something that's going to happen immediately. If you're expecting another flash crash like you saw here, yeah, I was sitting in front of the computer when it happened. I was actually doing analysis for ForexAnalytix that night. I think we can see these prices again at some point. So anyway, that's why I had to point that out, because I don't I think you have to be you have a little bit of a raised awareness at this stage in the game. All right, Dale, I'm going to pass over to you. I know you got an interview coming up. I don't know who that interview is, but
Mike Pisani, no relation to Bob Pisani.
Oh, okay, great. Well, we'll have a great interview.
He gets asked that. He gets asked that all the time. Are you related to Bob Pisani? So, anyway, I don't think Bob Pisani really knows how to trade, but Mike does. So, Mike, welcome to Face. I'm going to make you the presenter, and looking forward to hearing your voice and seeing your screen and having a conversation with you, my trading warrior brother. Thank you,
Dale.
Blake.
Thanks for having me on.
Oh, Mike, it's a pleasure to meet you. There is a drop-down menu, okay?
I already
Beautiful.
got it. I think my screen should be coming up here.
Yeah, so I wanted to clarify because I saw your tweet. People ask you if you're related to Bob Pisani, and Bob's a reporter. There's a big difference between reporting and trading. Reporting is what happens after the fact, right?
Yeah, it is. You know, Pisani, for what it's worth, is like Smith in Italy. It's a very, very popular last name.
All right. Well, you know, on Twitter, though, I do see a picture of it. Looks like, you know, Options Action or Fast Money with Guy and Brian. Is that you in the middle?
That is me in the middle.
Okay.
Okay,
so cool, man.
I get invited on something like that, and it's a fun to go down there, and you know, Guy was great, and it was just a lot of fun.
Okay, Mike. So why don't you tell us a little bit of how you got from point A to point B in this business? Perhaps start with your first foray into it. How did it happen for you, or should I say to you?
So for me, I was finally starting to make some real money in sales, and it was just after the financial crash was just ending, and I was watching that market through that whole time and just fascinated by it.
Okay.
And just after
what
that,
kind of sales?
I was doing healthcare sales. I sell analytical software to health insurance companies.
Okay, cool.
Mostly fraud, waste, and abuse, which is interesting in the market we're in.
Okay. All right. So did you gravitate towards those types of stocks because you had that background?
No, I just started really getting fascinated, and I was watching names like GM and Ford and Starbucks and Citigroup, and I felt like these things were just completely oversold, and I knew some of them wasn't going to work out, but I started my first investments, and I basically threw a lot of money at that, and obviously on GM I lost it all. But everything else was a huge win, and I got into my first triple leverage fund shortly after that into the SSO.
Okay.
And FAS, and started playing with those, and obviously they all ran back up.
Right.
And I started realizing the power of leverage, which started getting me to look at options.
Okay. All right. So I've traded my share. I knew enough to be dangerous. I didn't know much of the Greek of it, and like most people, I was just a buyer. I didn't really understand the writing game, and always felt if I sold something against my long position, it would cap my gains, and I was a greedy guy and I didn't want to do it. So tell us about your experience in options, and are you self-taught, or did anyone kind of show you the way, bro?
A little bit of both. I spent a lot of time following people on Twitter and in a couple of different people's rooms out there at different times and learning about options. But ultimately, I found that the best way to do it was just to sit there, try different things with small scales, and learn what works, what doesn't work, and then just start studying. There's lots of books out there. There's lots of information out there. You can Google it out there. There's so much information for free now that we never used to have before.
Right.
You don't need to have somebody be an expert, but then you have people like me who can teach you the very basics and stuff quickly and easily, and get you up to speed in very fast, in very short order these days.
There are a lot of charlatans out there too. That talk about 1,000% gains, which is all blue sky and don't represent risk either. So how were you able to discern?
1 cent option, right?
What's that?
I can easily make 1,000% trade on a 1 or 2 cent option.
Yeah, right. And and the spread is what?
Yeah.
Anyway, so who were some of the guys that were influential that helped you?
Bob Lang, who he's been on Jim Cramer a bunch of times. I hooked up with him. He was a friend at one point. Wall Street Jesus, another guy out there who I learned a tremendous amount from over the years, just listening to him and just watching what he put out there.
Interesting.
Those type of guys, they know their stuff, and if you listen to them and you don't just blindly follow, but you listen, you ask questions, you learn stuff. And I think that's what I would encourage everybody is, if you're in a room like here or anything, ask questions, because if you don't ask questions, you're never going to learn.
Well, you do mentor.
Yep.
You know, I notice, and so you're a teacher. I could tell you're a natural one. Have you found that people, you know, people that want to sell the secret to trading, like it's an indicator or it's, you know, a cross or whatever it is, that most people are too lazy to put in the time that it takes to persevere and live through adversity to make it?
I hate to say it, but yeah, I agree with that statement.
Yeah, people just want money to drop into their account, and if you want to be a discretionary trader, don't you have to spend years to make breakthroughs?
And you have to have hard losses and hard lessons, and recognize that the market's constantly changing, and you have to change with it and adapt to it. And you know, people want trade monkeys, I think, Dale. They want somebody to just follow blindly in and out of trades, but then they have nobody to blame but that person they followed when things go wrong.
That's one reason. And what do they do when that person is on the Grand Cayman Islands and doesn't deal with retail or the public anymore? They're lost.
Yep.
They have to find someone else to coattail.
What I try to do is teach you how to trade. You know, I give you lots of ideas and setups every day, and the action and the heartbeat of the market, and try to teach you how to make the decisions for yourself. You don't have to follow me in and out of a trade. I'm giving you the setups. I'm telling you what they're buying and what they're going after that day. It's up to you to get in, manage your trade, and get out, but I will help you. I will tell you what you should be doing if you're going along the way. You should be moving your stop up. You should be taking some profits here, right, if you're in it. But you have to learn how to manage it. And I want to be honest with you. 2 days ago, I told everybody in my service to be very careful, because the market to me was starting to flash some serious warning signs that things may not be as peachy as they've been. And I've been bullish since just before Christmas.
Okay, nice. Okay.
Now, I don't think we're going to fall apart here, my friend. I think we're going to get a nice little, 3 to 5% pullback. But, it's about recognizing when the market flashes signals and teaching that to people. And I give them the same stuff. And it's not an indicator. It's everything's for free. Anything you want in the market, it's all out there.
Let me ask you this. Is a major part of it, and I've heard it from several option traders before, is following size and volume in certain strikes and individual issues that are a tell for you?
Yeah, what I particularly like to look for are momentum sweepers into a name. So, we didn't really have much of it yesterday, but you see names like J&J was a good example yesterday. And let me pull this up for you. J&J, dipped and got this big pop, and they came after the May 24th 143 calls hard into the bottom. And not one big order, but they were sweeping it relentlessly, like 200 to 300 at a time. Now,
that's sweeping. Okay, so that's a new term for me too. So sweeping is not a guy coming in with buying 10,000. It's consistent order flow of smaller size, accumulating the volume and open interest.
What it really is a sweep is somebody that wants to get those options as fast as possible. So instead of going and negotiating a rate with a single exchange, like a large block, they go across every exchange to fill as quick as they can. So, they'll go out there and they may get 100 from one exchange, 50 from another, whatever it takes to get to that number they're looking for.
Can you trade options in dark pools like you can equities?
No, I don't believe you can trade options in dark pools.
Okay, so there's no, because I've had someone on who, they get their signals from what they're seeing in dark pools because they don't have to report the position for 24 hours. So you don't get that edge in options. So it's more immediate. The market is showing its hand when you see sweeps.
Correct. And, what you look for if that continues, and you'll see it on days like Apple yesterday, there were small sweeps constantly yesterday into the weekly 215 calls as it was going up, right? And when they keep coming as it's going up, they're still interested. And when you keep watching until it stops, and then you watch when you get a dip if they come back. If they come back, that usually means they're not done.
Did they?
Nope.
Okay.
Did not come back.
Yeah, because it was even though it was still an up day, the candle was kind of negative, don't you think, on a daily?
Actually, I disagree. I thought it was, well, a little bit. It came back in. It was a little extended, a huge move. But you're right. If it should have held the top half of that candle, if it was going to be ever any good, you're right about that. It gave back more than I would have liked to have seen if we were going to get that.
I mean, everyone who went for it, the first few hours of trading come in underwater today.
Correct. I mean, but it's a heck of a lot better than the daily candle we got on AMD yesterday.
Sure. All right, so that's a great point. You bring it up, and I believe this is one of the most important parts of trading, and I want to know how you do it in options. It's identifying the relative strength and the relative weakness, and if you do that and your timing isn't perfect and you're shorting the relative weakness, it's usually more forgiving than if you're shorting the relative strength. So do you have some kind of screen based upon relative strength rankings or something for your preferred longs, strategies and options, and preferred bearish strategies and options?
So what I use is different things like the put to call indicator. Let me pull it up here for you. You guys can, I'll give you the link for this if you want. I post this once a week out there publicly. And what this tells me is when it's above 1.75, the market sentiment's getting too bullish. And that means they're buying too many calls on the market. When it gets down below 1, we're getting too bearish. That means sentiment's going the other way. And I use this as a contrarian indicator, Dale, right? So of late, we've been the market's been stuck in this bulled up mode for the last month. And that's a sign of beginning of FOMO, fear of missing out, that we see. Yeah. And I get very cautious or look at shorts when we keep getting up here. And when, this December reading, see how low we were down here? That's when I'm looking to get long the market, right? Big, not just day trading, get long, because these are deeply, deeply negative readings that you usually don't get unless there's a crisis going on. And we didn't really have a crisis back in December. We
had the fear of one.
Yes.
More gloom without the doom.
Yeah, correct. So I like to use this because this gives me an idea of which way the market's leading from a sentiment perspective. And I always feel that when sentiment gets too big one way or the other, we're looking for a smackdown.
Okay. All right. Do you believe that there are still stop hunts in the market? Used to be open outcry. When you started, there was still a little bit of open outcry. How do you use, I have a question from the audience. Scott Henderson would like to know, how do you find momentum sweepers? You have criteria for that?
I do. I have. I use Trade Alert, and they're great software. They're a little pricey, but for me, it's more than worth it. And I have my own custom solution, but I look for sweeps of 250 or more constantly coming in, and I just look for consistency on it.
Okay.
Okay. And they'll stand out, and you look for them in the same name over and over and over again.
Okay.
So on a day like when AMD is humping, you'll see them come in 60, 70 times.
Okay. Thank you so much. Scott says thank you.
You're welcome.
Thank you, Mike. Mike, do you use stops on options? How do you know when you're wrong? Do you just get out of the way, or do you actually have a physical order in to stop yourself out of an options trade?
So both. Let me go back to your previous question. You were talking about, do we see stop hunting this market?
Yeah.
I see it all the time.
Right.
You put a stop in on common. I love to trade common off options flow sometimes too, because you don't take you don't have the IV games that take place, the implied volatility. But you put a stop in and you immediately see them take you out to the penny and turn around and go the other way.
Liquidity, going for the liquidity.
Absolutely. And in fact, you see all these little games, this market right now is full of it. But to put it on options, how do you do it? Typically, depending on my time frame, if I'm on a longer term option, I'll put a stop at around 50%. Okay. If it's 50%, I'm wrong. The delta's not there. Everything's wrong at that point. Now, what happened in J&J yesterday is I got green, And all of a sudden, you see how this on the 5-minute chart, the stock was going sideways?
Yeah.
The options started dropping like a rock. And that was the market makers playing games, and they dropped the implied volatility. So as soon as I saw that, I made a decision. I lost about 30 cents on my options, took the hit, but rolled out of that strike to June 145s and bought more time. And now I have a 50% stop in on that one.
Okay.
So when you see something going on there and you're getting hit and the stock's like this, something's going on, get out of the way. Obviously, that was just, whatever I did yesterday was wrong. I took a loss on it, and I'm up on the June 145s now. So whatever was going on there, you put a stop in place. The worst thing you can do is just sit in something and just let your entire premium go to zero.
Yeah, I've done it.
Yeah.
So, that brings me to something, we learn the most from our mistakes. What was your biggest mistake, Mike?
2014, 2015, after 2014, after a huge year, I tried to trade exactly the same way with options and gave a tremendous and almost all of it back before I figured out that you can't trade every market exactly the same way. And that for me was my first big eye opener. That for me was the learning lesson that you have to adapt to markets, change with them. And when the market changed, remember how choppy we got in 2015, 16, very sideways?
Yeah.
You couldn't just sit in options. And that's when I learned that you didn't just keep buying and sitting in them and letting them go to zero. And I learned that lesson the hard way.
We all do.
Yep.
You know what a friend of mine used to say to me? Dale, how many times do you have to get hit in the head with a ball peen hammer to know it hurts?
Yeah. So
for me, it was about 5,000 times.
We're long every day, right? I don't know about you, but almost every day, I don't take a setup that I should have, or I take one and I let it go too far and take a small loss on it. But overall, you're going to be wrong in this game. It's accepting that. It's keeping your losses small and not letting them get away from you, and trying to take the emotion out of this if you can.
Yeah, it's all in our heads, isn't it?
Yeah.
So what's in Elon Musk's head? You wanted to talk about, there's always a lot going on there. Will he be leaving for Mars if Tesla trades under 200, or what do you think?
Well, I don't know. We're trading up. We're up at 250 right now, just shy of it.
Nice recovery.
Well, Elon Musk, I think he's brilliant, but he's kind of like our president. You just wish he would just stop talking.
Yeah, good luck on that one.
Yeah. So they did a secondary today. After saying forever we don't need a secondary, they're doing 2.2 million plus shares.
Diluting. And why it's up here? It's because it's up now almost $20 off the low. Well, he's buying 42,000 shares or so of it. Himself.
Yeah.
Of the how many? And that was enough to get the crowd to go along with it?
Well, I look at it this way. On a daily chart, this stock has gotten pretty oversold down here, right? Yeah. We've had a long move. In fact, I was pointing this to people out. If you look at the last year, ever since that 420 stuff, this stock's been a disaster. And you can see this consistent downtrend, right? When you look at the chart, coming in, and it was just oversold here down this 230 area. I do think this is a long-term short, my personal opinion. But I told people yesterday I wouldn't be shorting it yesterday. Let it reconnect with the 8-day. Let it find some place where you can at least make a educated bet with a stop loss behind it. Because right now it's in limbo. So, here it's through the 8-day, it's all the way up to 250. So if it gets to 260, that would be a place where it broke down from. That would be a place that if you liked it short, I would try to short it. And the options market has been all over long-term, way out of the money puts on this thing for the last week and a half.
Okay. Why an 8-day MA? How did you choose that?
I used to follow Scott Redler, and I learned a lot watching him. And for me, I found that the 8 EMA works. It's a very fast-moving average. For me, I have momentum. If a name's above it, we have momentum. If we're below it, we have less momentum. So, one of the things I've been talking about here in the S&P 500 is this beautiful trend where we rode the 8-day all the way up here, and for the last month, we held it, right? And yesterday was the first close below it we had since all the way back here on the 28th. And so, what I always do is I'm learning from everybody.
Yeah. It's called intelligence gathering. Why do you think you're here?
Yeah.
We learn from everybody, Mike.
always. And
Yeah.
if you want to be, and if you want to have a long time and a career in this game we do and what we love, you have to be learning every day.
Growing or dying, from Mike Pisani. So, Mike, Tesla, and where you're getting some warning signs in S&Ps. Any other instrument you'd want to wrap it with?
Sure.
That you want to talk about?
Sure. So, you look at all this here, and by the way, at the S&P, my target right now is probably 2840 would be my ultimate, would be where we pull back to and see if we held that gap or just filled it, reversed off of there.
Okay.
I like to use the SPY only because it has volume. The S&P doesn't.
That's what kind of volume did we have daily yesterday? I interviewed a guy who said if we have the same kind of volume that we had on March 22nd and it's a down day, it doesn't look like we had the same kind of volume.
No, we were.
I'm looking back at March 22nd, and yesterday it looks like it might be 60%. So you really didn't have the volume on that decline that you needed.
But it was a tale of two tapes yesterday, and in the morning it was extremely low volume. I believe coming into lunch we were at like 16 million shares through the first 2 hours.
Okay.
And then post Fed it was obviously volume ramped up. Which is not, this is normal, right? We're not talking anything unusual. But to your point, yesterday is not the type of day where the type of volume where it gets me nervous beyond belief that we're going to crash. It wasn't one of those 150, 200 million share days. It was 70 million, right?
Right.
That doesn't get me worried.
Okay.
One last thing I would point out, these oscillators, they're very good for helping you get to when you're overbought and oversold. So like the NIMOT here, which is I keep this up all the time. I'm looking at this on a daily basis. When you get a reading that is negative 200, you're usually likely to get a nice oversold bounce. Likewise, when you get a reading that's over 200, you're considered overbought. We got a very overbought for a while on this bounce. But what I like about this here is we're already negative here on this pull, which tells me that we're going to quickly get into oversold if this market pulls. So I don't see a deep sell off quickly here without some news. And ultimately, I was listening to you guys earlier. I do think we get a China deal soon, and I think ultimately that will give the market a reason to take out the all-time highs, and then we see. You know what I mean by then we see?
Yeah,
then we see.
Sure I do. Sure I do. Let me ask you this: looking at those last indicators, how do you know the difference between what is going to be a low or a high for just a bounce, like you said, or that it could end up being a major inflection point?
What I do is I look at, as we're approaching an overbought area, I watch the way the market option flow is coming in. So are they still extremely bearish, or are we starting to see some big bullish bets come into the market where they're coming into the S&P 500, say, and buying, $1 million or $2 million in upside calls? Or are they still coming in and heavily hitting the put side? Does that make sense?
Yeah, money talks and bullshit walks.
Yeah.
Okay.
So you put these things together, right? It's kind of, I use these to try to give myself an overall view of what's going on, and then obviously price action being the most important driving.
Okay, one more question from Scott. Do you have a favorite delta and why?
So Scott, the answer is I like to stay between 30 and 40 on delta on most names because I can get the move faster out of it, but it depends upon the name. So it depends upon the stock. So on Amazon, I'll take a 10 delta or a 12 delta because this thing can move 40, 50 bucks in a day, right? But if I was going to trade a GE, for example, I would do a delta of 50 plus because it's not going to move more than $1. And I'm going to look at that. So if you see right here on my charts on the daily, I always have this ATR up, right? Average true range,
yeah.
Right? That's trading range, right? So I know that, GE only moves 30 cents in a day. So if I want to play that, I want to be more in the money where if I'm in Netflix, right, I'm willing to take less delta because I'm going to get a $10 move if I'm right. Does that make sense?
Scott, that answer your question? Anyway, well, Scott's answering. He said perfect. Why don't you be a good time right here, Mike, for you to go to your website for people that have an interest in learning from you and following your ideas. So a good time for us to turn this over into the best way to contact Mike Pisani, Ad Options Mike. So there's Mike's website. What's the address, Mike?
It's smartoptiontrading.com, Dale. Thank you. And if you come in here, first of all, I have a free newsletter once a week. I don't send out a lot. I'll send out a weekly video of a recap of the week. It's free every Friday afternoon.
All right.
Okay, that's the only time I bug you guys. I don't come out and send you out deals or anything to offer you.
Okay.
And if you're interested in real-time option flow, you come in here, you sign up. Every day, first of all, you get all the flow throughout the day, news, events, setups. But it really starts off for me in the morning. Every morning I do a video. It's about 10 minutes long, telling you how I feel about the market that day and what I'm looking for, names I like. I'm live with everybody for about 3 hours a day in a chat room. We come in, you can interact with me. Every night I do a recap video talking about the action, what's good, what's bad, what do I feel about the market, what's swingable. And then once a week I do a mentoring webinar for all my subscribers where this is your chance for any questions I can't answer during the day because, during the day I'm trading. All right, we come in on Thursdays and we do a half-hour, 45-minute session.
Okay.
I trade for a living. I charge $25 for the first 30 days, $100 every month thereafter if you're interested. So, and if you have questions, you can't hit me there. You could also come get me at Options Mike on Twitter. I'm very interactive there. If you send me a direct message, you'll get a quick response.
Mike, I'm so glad that I found you on Twitter and that our paths crossed. And like it or not, you're now my trading warrior brother.
Like it, I love it.
Is that okay?
It's fabulous. I appreciate you having me on and anytime.
Okay, and I really appreciate you taking time out of your day today to edify the FACE community. And my hope for you and all your mentees is that money just drops out of the sky like a thunderstorm for you going forward, and wish you greater success than you've ever had before.
Thank you, Dale. Thank you, everybody here in the FACE community, and my same to you. You guys have a great trading day. Make money. Be wary of the market here, and it'll figure itself out.
Thank you so much, Mike. That's a wrap. I have one question from Arnie Day asking about the reimbursement program. Arnie, if you're still here, the reimbursement program is if you go to our sponsor, they'll set you up with a broker, and you should have this anyway, where just your trading, the reimbursement will pay for the subscription, or you get a rebate check. So if your broker's not doing that for you, contact Forest Park FX. And Mike, so thank you so much for being here. Everyone, we have NFP tomorrow. And you know what? One of my favorite guests is going to be with us tomorrow, David Brady. How many that are still here like David Brady at Global Trading Pro? So we're going to wrap the week with some great action with NFP and an excellent interview with David Brady. So until then, remember, don't just count your pips, count your blessings. And me and the team will see you tomorrow to wrap up the week. Adios. And good hunting.